So let me ask you a question. When was the last time you sat down and reviewed your financial reports, not your bank balance? When was the last time you reviewed your profit and loss, balance sheet, and cash flow? You log in and you see a balance that looks okay when you check your bank balance, and you tell yourself you'll get to the reports later. And later turns into next week, and next week turns into next quarter. And those reports sit there. Or you're not even requesting them from your bookkeepers. Because somewhere along the way, opening them started to feel like something you'd rather not face. Sound familiar? So here's the thing. This was never about you being bad with numbers. Nobody ever taught you how to read them as a tool instead of a verdict. And every single month that you don't look, you're still making decisions, hiring, spending, pricing. You're making all those decisions blindly. Let me say that again. You're making the biggest decisions in your business blind, when the answers or the information to inform you to make the best decision for you and your business may be sitting in your financial reports all along. I'm Amber De La Garza, and you're listening to the Small Business Straight Talk podcast. If you're a successful, busy, small business owner who wants the straight talk on self-leadership, personal productivity, financial clarity, operational efficiency, team leadership, and business strategy to maximize profits, reduce stress, and make time for what matters most, then you're in the right place, and I'm so glad you've joined me. Today is episode 426, The Financial Reports You Keep Avoiding with Natalia Zacharin. Natalia is the founder and CEO of Zacharin Consulting, an Inc. 5000 entrepreneur. She helps 7- and 8-figure business owners turn their financial data into forward-facing GPS for their business. Her work focuses on helping owners spot the silent cash leaks draining their profits, know exactly when to make their next hire, and build a business that becomes a highly sellable asset. Natalia and I are going to be talking about how to put your reports to work, why profit and cash flow are two different things, and the signal that tells you when you can finally afford your next hire. And now let's meet our guest and get to the straight talk. Welcome, Natalia, to the show. How are you today?
Good, thank you. How are you?
I'm so good. We got to catch up for a brief moment right before jumping on, and I'm really looking forward to diving into such an important topic for small business owners today, all about bookkeeping and financials. But before we do that, can you let our listeners know a little bit about yourself that we didn't hear in your official bio, or perhaps even like, why do I get to talk to you about this today? Because I'm sure there's a good journey there of why this is important to you.
Yes, actually, I had a very unconventional start into the accounting world. I got divorced in 2012. I found a job, and my first introduction into the financial world was I became an invoicing clerk for a big corporation. There, I befriended the CFO, and he just would give me stuff to do. And I was starting to learn a lot more about the business. And after he left, I had been there for a while. I stayed for another several years, and then they started to get rid of my position, and they demoted me. And I saw this coming, and I was trying to find another job, and I couldn't find other work. And I just started dating someone at the time. He's now my fiance. And I was
Congratulations.
Thank you. And I was telling him I can't find another job, and they're demoting me. I know I'm going to lose my job. I don't know what to do. I'm a single mom. I was 49 that year. And he said, why don't you start your own business? And I had never considered it at all. And I remember we're sitting in a cafe, and I'm looking out at the people watching as they're walking by in Annapolis. And I was like, start my own business. Like, what would I do? And he said, well, accounting, bookkeeping is a nice business to have. And so I figured that I would just start bookkeeping as a side gig to make some extra cash. And that's how it started. He sent me this 8-week course on how to start your own business. And I just followed the course along, still working full time, being a single mom. And in January 2019, I closed my first client while still working. But everything took a lot. It sounds like it was easy, and at this point now I have 16 employees or an Inc. 5000 honoree, and it sounds like everything went swimmingly well. But there was a lot that went into it. But that's how it started. I didn't even think about starting a business, and now I have a multi-million-dollar firm.
Yes, that's incredible. It's what does that say? When one door closes, a window opens, or just
Yeah.
like that's such a great opportunity that he even seeded that idea. And it sounds like this was what you were meant to do, and you're doing great.
Yes, I really feel like the universe pushes us into a direction that we should go in. I didn't belong there. I had ideas and I wanted to do things and no one was interested. There was no growth potential. And I would have stayed if they weren't firing me, to be honest. I would have stayed maybe forever. And that's not where my purpose is. That's not where I belonged.
You were bursting out of the box they were trying to keep you in there, and you had
Yes.
so much more potential and so many ideas. All right, so you start bookkeeping. This is a great entry. Okay, so you start bookkeeping and you start for small business owners.
Yes,
Yep.
exactly.
And what do you see? I mean, I'm sure that had to have been like a shocking surprise when you started doing the books for small businesses.
Yes, there were a couple of things I noticed. First, I was an engineering major, which is so interesting. This was a million years ago, in my teens and early 20s. I was an engineering major. It was really interesting to see how much of that learning worked in the bookkeeping. And I think it's because bookkeeping is not data entry. It is understanding what you enter into, what you record and how that interacts and how it affects the statements, the financial statements, the balance sheet, the profit and loss, the cash flow statement. So I would enter in a number with another screen, look at and refresh and see what is actually happening on the financial statements. So that's how I really learned bookkeeping. And I learned that it's not data entry. It is really about how the financial data that it compiles with the recording of several transactions. So what I found was shocking in the industry. My first client had a mess. I saw immediately that something was significantly wrong. He was like at a negative $2 million or something, like it was really obvious. And so I taught myself how to do a cleanup using YouTube videos, step by step, on how to do a cleanup of accounting. And I didn't charge for it because I didn't know at the time that I should, which is something very normal when we first start out.
That's
That
right.
work a lot more and make a lot less money. And that's the learning process. And what I noticed was in that first year, how many people were coming to us with really bad financials, or coming to me that the financials were wrong. Something was off, something was missing, assets weren't booked correctly, like all these things that are more complicated on the balance sheet. So that was the first thing I noticed, was that they're not getting the care and attention that they need. And I think it's because there's this overwhelming condition in the industry that says anybody can do bookkeeping. My sister's doing it. My office manager's doing it. My fiance is doing it, or whatever. And that was the first thing I noticed. Still going on today, because anybody with a computer says they're a bookkeeper.
Yes. And so then it is seen as just data entry, and it's so separate from, your CPA, or separate from you looking at it, or how you would use these reports. And so it's just like whittled down to data entry. Just put the data in there.
Yes, I noticed. Oh, sorry, I didn't mean to.
No, go ahead.
That was exactly what I noticed. There was there was very little communication between the CPA, the tax person, and the bookkeeper. So the bookkeeper doesn't understand how to read financials, a typical bookkeeper, and they don't understand taxes or tax law. And then the CPA actually doesn't know how to do bookkeeping. Most of them don't. And so now I realized that I had to fill this gap of being something in between and knowing all the parts. And so that's what we started doing.
And okay, so then if you have bookkeeping and you're like, great, I get it done for tax season, right? And so if you're only thinking your books are for taxes, then you have a whole year and you don't need to be looking at them every month. And if you get a little behind, you'll figure it out. That's the prominent mentality of the books. It's a kind of like a have to do, but it's not time sensitive. And I think we agree. We only talked for a brief 2 minutes before we hit record, but I think we can agree that timely financials are imperative to business owners and how they should be making decisions and running their business.
Absolutely. It is the most foundational piece of information. One of the main reasons why we were as successful and so quickly is because I knew how to do bookkeeping and I understood how to read the financials. You don't have to do that as a business owner, but you should have someone that can do that with you or show you how to do it or do it for you. But you should be looking at your financials. Looking at your bank account is not enough. Looking at how many invoices you have that are coming due is not enough. That doesn't give you the full picture. And it is kind of frightening how many people are making decisions without that basic foundational knowledge that's so important.
Yeah, I would love to dive into that and just kind of uncover what kind of information can be pulled from understanding our financials and the different reports. So maybe we go through just a couple and what types of decisions should business owners be making based off of understanding what this report says.
Absolutely. What's really fundamental is first figuring out if your bookkeeping is even correct. Now, is it up to date? Up to date is a different definition for different people. And the industry has kind of taught or educated business owners that up to date was last December, and we're in June, or last quarter. Up to date is literally within the last week. That's up to date. You do want to look at financials that are a complete month, so that because that gives you a full picture. If you're looking at financials that are mid-month, you're probably missing half of the picture. So, for instance, maybe only one payroll was recorded instead of two. That's a huge expense that you're not considering yet. So, looking at the month end is actually really important, a full month, and then looking at the trend. So, you want to look at month to month on your, if you're using QuickBooks or something else, month to month. And then you're looking for anomalies too, like how has the revenue changed over time? How have all of these other expenses changed? Or if you have cost of goods sold, payroll, are there any anomalies? And do the anomalies make sense? Like maybe you had a $20,000 software cost because you paid in advance, and that's normal, but usually it's $1,500 a month. That would be something that would make sense to you because you knew that happened. But if there's something like that in there and that doesn't make sense, and there's something wrong. So looking month to month is really important. Looking for weird negative balances, especially on the balance sheet. A lot of people don't know how to read the balance sheet, including a lot of accountants, which is super interesting. And that's where usually we can see that something's wrong. So if you have negative balances or bank accounts that don't exist, or the balances are wrong, a negative loan or negative credit card balance, weird things that shouldn't be on there. You have to make sure all of your assets are being booked for the full value, not what you paid as a down payment, but the full value of the asset should be booked. That would be vehicles or houses. If you're in real estate, an asset is something that's usually over $5,000 per each item. It's not going to be like your chair if it's $200 or something like that. But looking for weird negative balances and things that don't make sense and asking questions. So the balance sheet is literally a snapshot of if you shut your door today on your business, what would be left over? After everybody paid you and you paid everything off and you got rid of everything, what would be left over? It's not the value of your business, it's just a snapshot. And you want to make sure that's a positive value. The P&L, like I said, look at the month to month. But I'd also like looking at so far year to date compared to last year to date.
That's my favorite. Yes.
What I see often is revenue stayed consistent, expenses went up. I see that a lot. And so profit went down. So if you're comparing the same time frame as last year, that answers a lot of questions of like, maybe I'm making less profit, or maybe my revenue did increase, but my expenses increased even faster. That happens often too. So you get to compare this year versus last year. And the last report that I really love looking at, and you can look at it by month or even from the beginning of the year to the last full month, and a percentage of revenue. There's a report that you can click on that says percentage of income. That one's really, really important because now you can see revenue is 100% that came in. And what is your labor cost? If your labor cost is too high, you're going to see what percentage of revenue is going away into labor. That's usually also a high cost. You can see your cost of goods sold. What is that percentage? What is your gross profit percentage? So looking at those as a percentage is really, really important. So then you can start making decisions, because if you're not making enough profit, that answer is in there, is in the expenses.
Somewhere in those expenses. Okay, so
Yes.
you just named two of my favorite reports. So I like the year over year, and I love turning on the percentage of income as well.
Yes.
Because a number can look like it's okay. And then when you're like, oh, but it's that percent of the income, you're like, that seems very skewed compared to the other things. It just gives you a different lens to look at it through.
Yes.
Or in a small business, your profit is like, I don't think I'm doing that great. And then you see it says 35%, and you're like, oh, okay, maybe I'm not, the number might not be the same observation as when you start looking at it as percentages.
Yes. And month to month, the profit is really important, because profit does not equal cash. So if you're like, I don't think I'm making any money, and then your profit's showing $300,000 so far year to date, but your bank is showing $30,000, that's a different problem. That's cash
Yeah.
flow.
Okay,
Yes.
talk about that and tell them why that's the difference, because that is, you're right. I see that. Like I'm looking as a business coach, I'm looking at my clients' P&Ls and balance sheets, and I often find myself having to explain why this number, actually your profit number, doesn't even match what you're seeing in your bank accounts either at all. And
Yes.
that's really confusing to them. So if you can dive into maybe the mechanics or why, how would someone understand the difference?
So first, you have to have a correct balance sheet, or it's not going to make sense. So that's really, really important. And sometimes even in QuickBooks, and we use QuickBooks mostly because that's that's the best software really out there right now for a business to grow into, and to stay with for a very long time. And there are a lot of plugins, a lot of things you can do. So most small businesses use QuickBooks. So in QuickBooks, their cash flow statement is not fantastic. It's sometimes very confusing. But what you're looking at is you're taking your profit number, and then you're backing out old debt. So if you owe credit card debt that you haven't paid every single month, so that current month, that debt is in your expenses for that current month. But if you're not going to zero and paying off your credit cards every single month, that old debt is now something that you're paying from another time period, and that's now cash and not profit. So you need to remove old debt. You need to remove any principal payments on loans. So as many loans as you have to understand what your principal payment is. Your interest should be booked as an expense, so it's already in the profit, but your loan payments are not. Or your line of credit payments. So if you have a line of credit and you're paying back money, that's also not going to be showing on the profit and loss. That's on the balance sheet. So all of these loans, lines of credit, old debt, you need to subtract that out of your profit, and now take any personal expenses or distributions that you're taking out personally. And
they may
subtract.
call that owner's draw. So
Yeah.
distributions is owner's draw, just to clarify, because there's lots of terminology for the same thing.
Yes. Some people call it dividends. That's actually for a C Corp. Some people call it owner draw. Sometimes it's called distribution. Sometimes it's called owner's pay, even though it's not payroll. So there are like a lot of terms, but it's basically money you're pulling out of your business, not through payroll, but just taking out of your business or using for personal expenses. So you subtract that out for that month or that time period that you're looking at. Now you can see after your profit what's left over. And sometimes you'll see, oh my gosh, I just took out all of my profit out of the business, either through distributions or owner draw, or I have a lot of loans. So I have to make now I can't make a 35% profit. I actually have to make a 55% profit to have cash left over.
Yeah, because you're paying yesterday's debt, right? And so
Yes.
why would they have gone in debt? Their profitability was probably lower. They needed cash infused into the business. And then those expenses then trickle in, but later in other months, the money that they spent on borrowing, correct? Like, you
Yes.
can correct me. So then now it's a vicious circle. Now you're taking whatever's left over from those expenses at the bottom and trying to pay back this old debt. And
Yes.
the money's moving.
It is very hard to get out of that cycle. I would say some people get into debt because they have to buy equipment, machinery, vehicles, moving trucks, lawnmowers, whatever it is. So some businesses have to. It doesn't make sense to spend it in cash. It makes sense to have that as debt because
Mhm.
you don't want to get rid of all of your cash when you're buying equipment. But if you're going into debt and getting loans because you are not a profitable business, that's a different story. And
Mhm.
now you have to consider, how do you get profitable first before you take another loan? Because you're not going to fix that system just by getting a cash influx. You're going to just go further and further into debt.
Yes. So, all right. So then let's talk about like business decisions that can be made. So someone that wants to think, they're thinking, I am so overworked. My team is overworked. My experience day to day, me, the business owner, is that we're really busy. But
Mhm.
then the P&L does not show that we're so busy that I can hire somebody, or maybe it does. What are they looking for on their financials to make that decision if they can afford additional employees or help?
First of all, I love this question because a lot of people make the decision to hire someone because they feel like they need a person because they're busy, not because they know they can afford it.
Yes, that's why I
So,
phrased it that
yeah.
way.
So they keep hiring and hiring because they're
Mhm.
so busy. There's a problem if you're busy and you can't afford it. So you have to see, can the business afford it first? I like doing that in revenue to full-time equivalent employee type numbers. So for a service-based business, which means you don't have a product you're creating, you're not a bakery, you're not a restaurant, you're not a pharmacy, you're not a construction company. So it's more simple. You're maybe a marketing agency, an ad agency, maybe even another accounting firm, any kind of creative, even photography. I would consider that less of a product and more of a service.
Mhm.
So if you're a service-based industry, you should be looking at a minimum of 200 to 200,000 in revenue per full-time equivalent employee. That minimum's low. The minimum I like is closer to 300,000. So a full-time equivalent employee is about $80,000 in salary. So really anybody that's 65,000 and up kind of already starts hitting that mark, because we're talking now, you might have benefits, you're paying their taxes, employees can be expensive. So if you have a part-time employee or even someone that works for you that's overseas, and this includes your contractors, I would look at your contractors as well. All of this is labor. If you have someone that you're paying $40,000 or less, that would be half of a person, a full-time
Mhm.
equivalent employee, right? So you want to make sure that it's a minimum of 200,000. So if you're at $1 million in gross revenue, that's 4 full-time equivalent people, contractors or employees, and that includes you as the owner.
I was
That
just going to ask that question. So does that include, yes. Yeah,
yeah,
because they need to pay themselves. Yes.
yes, it does
So,
include you, because eventually you're also going to keep buying back your time,
mhm.
and you will have to have someone in that position or several positions.
Okay, awesome. So I have a resource that I often share with my clients. We'll put a link in the show notes. QuickBooks actually has a calculator where you put the state and you put their salary, and you can put in what benefits there are. It
Mhm.
calculates taxes, and so that it will give you that number where you were just saying, you think you're paying them 65, but is it really creeping up to 80, depending on the full out-of-pocket expense for the employer per employee. And then
Yes.
you can play with that number of, you're negotiating a salary or hourly, but you need to know what that impact really is going to be to your business for the full
Mhm.
cost.
Yes, and I would even add the cost of workers' compensation, because that depends on how many employees you have. Not really, and like any kind of other benefits, health insurance or anything else that you're giving them. But don't forget workers' compensation as part of your labor cost, because
Okay,
that
that's
go up
great.
too.
What other decisions should
Mhm.
a business owner be consulting their financials for to make other than hiring?
I would say profit and cash in the bank. Look at your profit as a number that needs to be a lot higher than you think. It's great to have a lifestyle business, and there's nothing wrong with that at all. But if you're building a business and hiring employees, it's a completely different number now. And the reason why you need your profit to be higher than you think, or maybe even higher than industry standard, is because you need the cash and the profit to pay back everything, any debt that you have that you may have incurred. You need profit to build up cash because you want 3 to 6 months worth of expenses in your bank account at all times. Because that will diminish and then it'll go back up over, depending on the time frame. And you want to be able to pay taxes. So remember that a large percentage of that money, close to 30% between state and federal taxes, is not yours. So you have to build up that profit with that cash. And why are you doing this if you're not making a profit?
That's right.
Think about your lifestyle.
Are you a believer in either a profit first or a version of profit first where they open up different bank accounts or savings accounts to pull out that tax payment that's owed, or a savings account 3 to 6 months of expenses, operational expenses, so that they're not visually seeing this large number in their bank account and thinking it's theirs?
I am. I don't like the 5 bank accounts. I find that confuses people because if you're not operating on a profit, what you're doing is constantly robbing Peter to pay Paul, and you're moving money around and then going into a negative and then having to pay charges, bank charges and fees. I see that happen sometimes. So, but I do like having several accounts. I do that in my personal life as well. I have my operations account. Some people like to have an additional payroll account, so you always need enough for payroll. And then you have to have a savings account or another account you don't touch. That's where you build up the cash. And what I did was when I first started, and it takes time to make money and make a profit. It took me 2 years really to start making. It took me over a year to start making decent money for myself. The first year was I worked more than ever before in my life, and I made less than I ever did. So that was the first year. It started turning, but every single time someone paid me, I put $10 into that savings account in the business. I kept it in the business because it's a habit. And so even if you can't put in a large percentage and don't want to be moving money back and forth constantly, start small, $100, $1,000, 1%, 10%. The goal is to eventually get to a minimum of 30% of gross revenue that you're putting into that other account and not touching. Because now you can take a few risks. Maybe you want to establish a lot of marketing and sales and advertising. That's going to usually dip your profit before it goes back up because you're testing things out. So you want to have that extra cash and that extra profit so that you can keep building and reinvesting back in the business. Maybe you don't want to wait till 300,000 or 250,000 per employee. Maybe you do want to start because you see that you have predictable revenue, that you do want to start hiring a little bit in advance. Well, now you have a cash that's in the bank, and you're also profitable. So making sure that you have enough cash is really important. I do like the savings account. As soon as I put it in there, I'm not allowed to touch it. You have to understand that money is psychological more than anything else. It's just value for value. It's very psychological, and you have to understand your own psychology. I know that if it's in my operations account, it is fair game. Just
Yes.
So I put guardrails on myself, and I put that in my savings account. Same thing in my personal life. I have a mortgage or rent account. That's my biggest expense in my personal life. So for instance, if my rent is $2,500, I'll put away $3,000 every single month because what I'm trying to do there is also build up 6 months worth of my largest expense saved up in that one account. And then I've got my regular account that I play with and some savings accounts and investments and other things too. But I do that also on my personal side. So don't forget, as a business owner, your business and your personal life are very intertwined in all of your finances.
They're intertwined, but do not mix all the money. Do not. If you can't, I heard you say if you have personal expenses out of owner's draw, I call it owner's draw, or distributions. But I mean, the best advice is if you're newer listening or you're currently doing this, is to separate business expenses and personal expenses.
Yes, very important. We actually see that as a mistake all the time. And I mention it because I know people use their business personally.
Yes.
Your business is a separate entity from you. Even if you're just an LLC, even if you're just a sole proprietor, it is still a completely separate entity. Make sure you have a separate bank account, a dedicated credit card, anything that you do for the business, it is business only. And if you need money in your business, you can fund your business out of your personal account, transfer that money and then spend out of your business. And if you need money personally, transfer money out and spend in your personal, but don't intermingle. You're opening yourself up to red flags and audit, no clarity in what's going on in the business.
Mhm.
And if you ever get to a point where you grow and you want to become an LLC filing as an S corp, because now it's a tax strategy after you get to a minimum of about 60 or 70,000 in profit per year, and you decide to do that, now it becomes really important that you don't intermingle, because you can lose your S corp status.
That's right. And the reason that we even create these entities is not just for tax purposes. It's
Mhm.
actually a protection to separate you, your personal entity, your personal assets from your business entity. And so when
Mhm.
you start commingling funds, you now pierce that. And now it's fair game for liability. And that can be an issue. And we don't know, like, that's not really common. It's not talked about, is, you get into a challenge where your business is being sued, you get a good attorney and they're going to find out that it's all mixed. There's no difference between your personal identity and your business identity. You're opening yourself up. So it's
Yes.
really, so many reasons to do this. It's cleaner for the books. It's cleaner
Mhm.
for tax purposes. It's cleaner for legal issues, is
Mhm.
to do exactly what Natalia just said, is to transfer the funds, have a clear separation between personal and business.
Mhm. And
So,
if you have multiple businesses, it goes the same. Every business needs to be separated out, because you're, like you said, legally, you're piercing that veil where anybody can get any of your businesses. And if the IRS ever audits you and you're intermingling transactions and bank accounts and credit cards from one business to another, it now opens you to an audit for all of those companies. And especially if you own real estate, that has to be separate. You don't want someone, if you're a dental office and someone coming in for dental work and they slip and fall and you own the building and that's all in one LLC, well, now they can sue you for that asset as well.
that's right. So really look into this. And I don't, not the we. So I will speak for myself. That was like the royal we, not that I'm speaking for you. Is that we need to not always know all of this. It's really
Mhm.
good to listen to a podcast and to understand what your risks are. But the real goal here is to surround yourself with people that you trust, that are professionals, that can give you the best advice.
Yes, absolutely.
I wanted just to go back to the different accounts. So I love that you shared in detail how you handle different accounts. I actually do. I was just counting them. I have 5 accounts. So
Hmm.
just to explain, I do follow Profit First. I've talked about it a lot on this podcast. But I do absolutely agree that a hybrid, or, like slowly getting into it and at least starting with 1 or 2 accounts, like you were mentioning, like a savings account or a tax account, is a great way to get started.
Yes.
So for me, I have my income account, and all that is like funneling money to the other 4 accounts. And then I have an operating account, a tax account, an owner's pay account, and then a profit account. And those are my 4 other accounts. And you're right, just like in business, and you're sharing these stories about, how hard it is when we first get into business. And I love that you're sharing that, because
Mhm.
that is the truth. And if someone's listening, they need to hear that.
Yes.
And it doesn't need to always be that way. But just like that, in the Profit First, if that's something you want to look into, is, when you were saying robbing one to the next, it's because you're really kind of guessing how to fund all those accounts. And until you start seeing your trends, understanding your cash flow, it does become complicated until you're more seasoned in it. So starting slow, starting with a couple accounts, and then building up from there, I think that's my best advice in those situations.
Yes. I would definitely, at a minimum, like you said, have 2 to 3 accounts and a savings account. Very important. There are a lot of people that start businesses and all of their money, they just spend it. They spend it personally. They spend it in their business. They have nothing saved. They can barely, file and pay their taxes. And that's not a way to go. And no matter how young you are, I do want to say this too. I see a lot of people a lot younger starting businesses, which is amazing. It's hard to start a business when you're older. I was a single mom. I turned 50 that year. It's not easy. But when you're younger and you get these habits and get this under control and start to understand, you have time on your side. You don't have to hustle as hard. And if you're saving money, trust me, you don't want to work this hard in your 60s and 70s. So do it now. Don't wait.
Absolutely. And, you said it so perfectly. It's worth repeating. Like, being a business owner is hard. It doesn't need to be hard, but it is a journey and a path that we have chosen. And it is not like other people that, get their paycheck every week or every 2 weeks. And you need to know that you are worthy of your own paycheck. You are worthy of your business taking a profit. And when you were talking about psychological with money, this goes into our business as well. When we're feeling overwhelmed, burnt out, wondering why we get up and do this every day, a lot of that is tied to profitability. If your business doesn't feel healthy or it doesn't feel like this is worthwhile, it is making it harder to show up every day consistently. And that's what your business needs from you. So it's kind of a vicious circle, but one, we have to show up every day so that we make a profit. And the profit then gives us the motivation to keep showing up every day.
Yes, we actually, I forgot to mention when we were talking about being extremely busy and hiring, there are a couple of things to look at. If you can't afford to hire and you're very busy, there are a couple of things that might be going wrong there. Number one is maybe you're not charging enough. That's usually part of the problem. Number two is maybe if you do have employees, you have employees that aren't in the right seat, that they don't have the right skill set, or they're not productive or effective enough. And it's sometimes a combination of all of those things also. So you have to make sure that you're bringing in enough revenue, and then you have to make sure that everybody on your team is extremely productive and effective and efficient, because you're a small business and you're not a nonprofit. And you shouldn't be carrying another adult if they're not able to do the work. You either train them up, they have, you help them with the skill set, or if they're not making the cut, it's also a skill to be able to terminate employees when you need to, because sometimes you have to do that and you have to get good at that too.
Absolutely. So those are leadership skills that you think need to be solved by bringing in additional business. And we have a whole series that I've done on the podcast. I'll link out to it called Revenue Leaks. It's a 4-part series. 3 or 4 part series. And we go into that about how the business model, how to price. But if this is fundamentally that you're running an inefficient business, it's like a boat with a lot of leaks in it. And it doesn't matter how much additional revenue you're bringing in, you're not going to end up seeing it at the bottom line of your profit because it's leaking out everywhere. So it's kind of like you're just putting a patch on it and it's not going to stay by just adding more business. In fact, to bring in more business to try and solve this, what you think is a revenue problem or a profit problem is actually going to probably further break your business if you're not handling like the underlying root challenges, which is what you were mentioning, which could be a leadership, it could be a training issue, it could be staffing issue, it could be standards issues. There could be so many things, processes, technology, you name it. Fixing the right problem is essential, and just throwing money at it is generally not the answer.
I want to, like we were talking also about surrounding yourself with the right people. That would be your insurance broker, have a lawyer. You don't have to have one on a retainer, but make sure you have an employment lawyer at the least that you talk to if you have issues, maybe a human resources specialist that you can talk to. But obviously CPA, accountant, a CFO, bookkeeper. But in addition to that, it's coaches and mentors. I'm a huge advocate and fan of coaching. I am a CFO. I know how to run my business. I understand my numbers, and I still always hire coaches in every aspect of my business. I have a personal trainer. I have a coach for my health. I have my mastermind for my accounting business. And that is like the secret sauce of how to get from point A to point B in the fastest, most direct way.
I agree. I think we wear enough hats as business owners. Having the right team around us is essential. So speaking of the right team, can you talk about what that financial team would be for a small business owner? So we have terms like CFO, fractional CFO, CPA, your bookkeeper. Like, just can you paint the picture, the connection and the relationship and how they should be working together? Even throw in your financial advisor for your personal life. And do they talk to your business financial team? I'm curious what your thoughts are about that structure.
Yes. So no matter what size you are, it's never too soon to hire a bookkeeper to make sure that your bookkeeping is up to date and it's accurate and they're doing the correct record keeping that you need so that you can make better and better decisions. As the owner, even if you know how to do bookkeeping, I don't recommend that you do it. It's going to get behind. You have other things to do, and that's not your job. Your job is to run the business, build, innovate, business development, and to get the business going. So bookkeeper at any point. And if you don't have a bookkeeper and you're like at $500,000 in revenue, you're late. Like do it as fast as possible. For a fractional CFO, anywhere from, if you're scaling, you could even start sooner, but typically at $1 million in gross revenue is when we see that it becomes more natural and more affordable for a company to hire a fractional CFO. So what is a fractional CFO? So a CFO is different from a bookkeeper. And they look ahead, they look towards the future. They take all of their historic data. So bookkeeper, CPA, all those other, and we'll talk about CPA and tax as well. They're all historians. They're all recording what just happened recently or happened in the past. The CFO or fractional CFO takes that information and now is creating projections and looking at trends and scenarios and they should be able to tell you in 3 months or 6 months or even 12 months from now, if you're headed in this direction, will you run out of money? Mm-hmm. Or will you make more money? Or when is it time to hire? Where is the profit leak? Are you leaking profit very slowly that you didn't even notice? So they tell you projections and forecasts like a crystal ball of what will happen and give you next steps from now until the next time you meet. That's on a fractional level. That gives you the option to talk to someone at a high level without spending $250,000 on a salary. So now you get to spend significantly less without benefits, and you get to meet with someone who also can see patterns of what works because they're working with multiple businesses, sometimes even in multiple industries, so they can see what's really working also. Because CFO work is not just strategy, but it's a little bit of therapy, it's mindset, it's a little bit of coaching, it's a lot of psychology too. So there's a lot that goes into it.
I love that how the marketplace has evolved and that is accessible to more mm-hmm. business owners because you can hire that expertise fractionally as needed in what your business, you don't have to wait until you're super, super large, like you said, to be able mm-hmm. to afford a CFO. This is a service that you can access and be that much further ahead by doing like a shared role with other business owners.
Yes. And a lot of times someone will hire a fractional CFO when there's already a problem. They're running out of cash. They don't know, they can't make payroll. It's never too late. Everything's fixable, but you should hire someone way before then. Why not hire someone now in advance so that you avoid those problems?
Yes.
And then there's a couple positions in between. So there's what's called a controller. That's someone that steps in between, usually from a bookkeeper and the lower end finance team, the more junior levels. And before the CFO, what a controller does is if you have a lot of complicated accounting, a lot of businesses, a lot of different structures, they review everything and make sure it's accurate. So they're at a senior level and they're just reviewing and making sure everything's accurate, and they do more complicated accounting. We have that baked in. Even if you're a small business with only doing bookkeeping for us, I can't stand bad financials. So we have that automatically. Everything is reviewed by an in-house controller, even if it's just bookkeeping. And if you don't have a controller, but you have a CFO, they should be reviewing it. It should be a hybrid role. Your CPA, and there are different CPAs, or you don't have to be a CPA, but what people think about CPA is taxes. You don't have to be a CPA to file taxes. A lot of people that work for CPA firms aren't CPAs. Sometimes they're an EA, sometimes they don't have anything. And that's fine because you don't have to have any kind of credentials to file tax returns. But their taxes, so there's two different tax people also. There are the historians, compliance. They file your returns. They make sure all the numbers are put in the correct boxes and tell you how much you owe. And then there are strategists that look ahead and tell you, well, we think if you're moving in this direction, you're going to have this tax liability or this amount of profit. Here's now what you can do to mitigate those taxes and to reduce those taxes. So if you're at a minimum of 250 to 500,000 in profit, you need a tax strategist because you're overpaying in taxes, maybe even sooner. And then
Absolutely. And that's where they kind of bridge between giving you personal financial advice and business advice, because it's all not one tax return, but it flows to your personal. So they might be saying how much you need to invest in your investment fund, or you need to add more expenses. It doesn't help to tell you what you could have done in February or March for last year. You need a strategist that's coming alongside you, watching it, saying, hey, we're in Q3. Here's where you're trending. Here are your options for minimizing your tax liability.
Yes. And usually you have to do that in advance. Most of the strategies are no longer available after the calendar year ends. So, and it's too late to do it in December. So you really need to be with someone on a regular basis in advance. And if they're not meeting with you at least quarterly, then they're not really doing strategy either. So that's another little tip. And then the financial planner, that's a totally different position. That's someone that's going to help you take your profits and your extra cash and help you invest so that you have enough money for retirement. You have enough money maybe to even buy investment properties or do something on the stock market, or look at whole life or universal index life insurance plans, or whatever it is that you feel comfortable with. That's another really important person in your life that looks at your entire picture of you. And if you have a spouse, looks at your entire picture and helps you to now take your money and build wealth and retirement for later.
Absolutely. How should these professionals be talking to each other, or should they? Because in my experience, they're actually siloed, and that doesn't work out very well, where you're like, I have my domain, I'm doing this. And then the next person's like, I'm doing this part. Should they all be talking?
They should. We have a partnership. We don't do financial planning, and we actually don't do tax strategy or taxes. We're starting to roll that out, but it's not something that we've really done before. But we have partners, and we're really involved. And your bookkeeping firm or whoever's doing your bookkeeping or your CFO, they should be able to introduce you to people they trust. And not get a kickback. We don't get any referral fees. I'm not interested in making money off of my referrals because I want my clients just to be taken care of. That's the most important thing. And in some ways, I think, especially for financial planners, they have a lot of laws and rules where they can't do that. But we have the financial planner that I work with for my company. If someone's looking for one, that's who we refer them to. And it is important because it all ties in. So if you want to add a 401k, for instance, that is financial planning. It's also a tax strategy. It also impacts your profitability and your numbers. So all three of those people should be working together. If you want to do some other strategies like a profit sharing plan or a cash balance plan, again, all of those are strategies that include all three services: tax, bookkeeping, and CFO, cash management, and your financial planner. So it makes it so much better as an experience for a business owner if they know that they have all three of them talking together. And oftentimes they should be on a meeting together for those purposes. And
That
helping
sounds like the
them.
dream. Okay, that's
Yes.
the standard that I want anyone listening to or listening to this podcast to hold, because it's possible. And we've had other episodes, but it's worth saying in case you're just tuning into this one financial podcast, is that I have this like rally cry of increasing our standards and expectations of our financial team, because unfortunately it's just become the standard of like, well, if you don't know, I can't help you. This is just how it is. Or maybe it's, you're hiring me for taxes. So like you said, I'm only seeing you once a year. And I'm like, but no, what you really need is a strategist. So all the things that you're saying is, because this is tied to numbers, and so many people have fear of numbers and kind of want to keep their head in the sand, it then leads to not wanting to make decisions about their financial financial team. And I really, really want this aspect of our businesses that will never go away. So as long as you think you're going to be a business owner, this whole financial aspect of your business will not go away, is to lean into it and to surround yourself with professionals that you respect, that are able to educate you, that you feel comfortable asking questions to. I think that's really important. That communicate and that you feel like they're part of your team and you're part of their team, meaning they're not like, well, we'll let you know when we've made a decision. This stuff is
Yes.
happening all the time. It definitely needs to be different. That's what I
Yes.
want.
Different. I think the goal is we don't need to take your business. Like, we don't need to have your business, but I want you to be successful as a small business owner. So your financial people should feel that way. Like, it's not that I want your business so badly that I'm just going to keep you in a silo and not introduce you to anybody. It's the opposite. Is I want you to be successful and find the team that works for you. I hope I can be that team, but I want you to be successful and just have more information so you can make the best decisions. I have sat in on meetings with people that are like, I want to choose a tax strategist. And I've been on a lot of those meetings, so I know exactly what to look out for. And so, and they're CFO clients, so that's what we do. I sat in on 4 different meetings interviewing with the client of, for a tax strategist. And then we would sit down after all 4 meetings and discuss the pros and cons of what he should be looking for. And then and support him in any decision that he made, right? So it's still the business owner's decision. But same thing with financial planners. Same thing. Having connections of people you trust, a great insurance broker, a fantastic law firm, a great financial planner, and there's going to be different ones because some work only in like the 401k world, and some of them will work in more personal investment world. So and they're not always the same people. So finding those right people, finding, if you're doing bookkeeping, finding a great CFO firm. If you're doing, not doing tax, finding a great tax firm, and there'll be different ones too. So some tax firms will only take nonprofits. Some of them do only strategy. Some of them are really great at just preparation. So really getting everybody surrounding you for your clients is really important. And that would be in any business. So if you're in the restaurant business, you want to make sure that you're surrounding yourself with the best people all around too. Or if you're in an agency business or an IT business, you want to surround yourself with the best people as well, all over, and have referrals too.
Absolutely. You know, when I was doing a little research about you, one of the things I saw on your website is you said you called it financial tech stack, a payroll tech stack, I think. And I was like, okay, so this is the people stack, is the financial people stack is not just like what programs are you using or software that makes your life easier, but what is the team around you that will make this all the financial conversations easier. Well, this is a great segue into you sharing with us. Thank you so much for being here. But I think this is a great opportunity to share a bit about your company. I think you have something special for our listeners. How can they get in contact with you and learn more about your services?
Absolutely. So we have a special page for your listeners, as you had mentioned. It's under www.zacharinconsulting.com/straight talk, all one word. There you'll find a link to the episode. You'll also find 2 downloads. One is 7 ways to find money in your business now. And the second one is the ultimate checklist for financial success. There's also a calendar link there if you wanted to get in touch with us. There are a lot of freebies and assets and all kinds of information all over the website as well. I have a profit playbook. I have a cash flow forecasting tool. We've got tons of blogs and information. So check it out.
Absolutely. And can you share a little bit about the services that your firm does provide?
Yes. So we provide everything from bookkeeping, cleanup, catch up, startup, any of those services, from a business just starting up to our largest businesses are over 35 million in gross sales, and everybody in between. We also provide payroll services with a payroll specialist, not a bookkeeper, because payroll, again, is not data entry. It is employment and tax law. So we have a payroll specialist. And then controller services are already baked in with the bookkeeping, and fractional CFO services with forecasting and budgeting and projecting. So if you're at 2 million, you want to make it to 4 million, or if you're at 500 and you want to make it to 2 million, or whatever those numbers are, we line it all up to help you improve your profit, make sure and safeguard your profit, improve your cash flow, make sure you have cash in the bank, you're hiring the right people, and you're getting an ROI if a return on investment if you're using any kind of marketing or ads or anything like that. So those are the services.
Excellent. Thank you so much for being here. It's been a great conversation. Thank you for sharing your knowledge and experience with our listeners today.
Thank you so much for having me. I really enjoyed the conversation, and I love how knowledgeable you are about financials too. I really can appreciate that very much.
I do. I love it. Not enough to get into the industry, but enough that my love for it is what was the underline of this conversation, is like how impactful it is to us as business owners to make decisions, to feel empowered, to own our business, and to navigate what inevitably comes up. When we have questions, we always got to fall back to the financials. What are the financials telling us? So that's how my love of the financials came to be. But thank you so much.
Thank you.
I love how Natalia ended our conversation around the financials and really, hitting home for us that when real decisions come up in our businesses, like hiring, spending, investing, taking risks, that you really want to be falling back to the financials and ask, what are they telling you? And my experience is by understanding how to read your financials and leaning on them for a perspective of information as you are navigating these big decisions in your business, it actually is very empowering. It builds your confidence knowing that you are making those decisions on purpose. You're not making them on a gut reaction, emotions, feelings, or a temporary state in which your business is in. You're making decisions based off of data, and that data lies in your financial reports. Now, I have loved having you listen to this episode of the Small Business Straight Talk podcast, and I sure hope you found today's conversation to be incredibly insightful and valuable. But I need to be straight with you. No change, no change. Without taking action, nothing will change for you or your business. So here's what I want you to do. This is a great next step. You get it. Intellectually, you're like, yep, I should be reviewing my financials. All I want you to do is commit to blocking out 30 minutes on your calendar and go open up one financial report that you may have been avoiding and read it line by line. Google it if there's a term you don't understand. Go to AI and ask questions. Or better yet, lean on your team, your bookkeeper, your CPA. Who is on your team that you can go and ask questions? I want you to understand what each of the lines of the financial reports mean in your business, where those numbers are coming from. And I just want you to feel like you can ask questions. So it starts with you reviewing your financials, and then write down 3 things that you've noticed or you have questions about, and Google it, AI it, or go ask your team of support. What does that mean? And how do those numbers impact your business? All right, that's it. The trick here is I want you to get started. There's so much resistance to opening up the financials that are sitting in your inbox, or maybe they dropped them into your drive and you never went to look at them. This is that first step. All right, that's what I want for you today. Now, if you want to go deeper on your numbers, I have pulled together all of my financial episodes into one spot. Because business financials and understanding the impact it has on your business is so, so important. So I also mentioned that I had done a series on revenue leaks, and you can find those episodes as well as all my other financial episodes over at amberdelagarza.com/business finances. No space /business finances. And then Natalia was also really generous in putting together some free resources for us. So this is just for you, the listeners of Small Business Straight Talk. So you can grab all those at Zacharin, Zacharin consulting.com/straight talk. We'll have the links in wherever you're listening to this in the show notes as well for those resources. And if you've enjoyed today's episode and you are new here, be sure to hit subscribe so you don't miss another episode. And I would be so grateful if you would share this episode with a fellow business owner who you think this conversation could really help them out. Don't keep this podcast a secret. Share it with all your business besties. So that's my straight talk for today. Until next time, have a productive week.